welcome to this deep dive. Today, we're looking at something pretty huge, the race to a $4 trillion market cap.
That's right. It's a number that sounds almost unreal.
And the source we're digging into, an article from The Motley Fool, seems to think Microsoft might just be the first to get there. So let's unpack that. What's the core argument?
Well, the article lays out the current scene, as of early May 2025. Microsoft's sitting at about $3.2 trillion.
Okay, already the biggest.
Exactly. Then you've got Apple at $3 trillion and Nvidia, despite all the AI hype, a bit behind at $2.8 trillion. So the piece asks, why Microsoft? What factors are really pushing them forward, maybe even more sustainably than the others?
Right, sustainably. That's interesting because getting there is one thing, but staying there.
Precisely. That's a key part of the argument.
Okay, so $4 trillion territory. Microsoft's leading the pack valuation-wise right now. What gives them this edge, according to the article, and why maybe not Apple or Nvidia, at least not yet?
Well, the article suggests it's this combination of Microsoft's sheer size already, plus, crucially, its projected growth path.
Okay.
Nvidia, for instance, their growth in AI chips is, it's phenomenal, obviously. But starting from a $2.8 trillion base, reaching and holding $4 trillion consistently is maybe a bigger jump, or so the thinking goes here.
Right. They need even more explosive growth, relatively speaking.
Yeah. And Apple's huge, but the article points out their growth trajectory isn't quite as steep as Microsoft's right now. The argument is that Microsoft's diversity, especially with its cloud platform Azure firing on all cylinders, gives it this broad, powerful engine for expansion. It's not just one thing, it's multiple streams working together.
Yeah. That makes sense. Less reliant on maybe one product cycle.
Yep.
And AI seems absolutely central to this story. The article mentions a, $14 billion investment in OpenAI since 2019?
A huge figure, yeah. And that investment isn't just sitting there, it's deeply integrated now.
How so? Where are we seeing the results of that?
This is where Copilot comes in. That $14 billion essentially supercharged the development of Microsoft's AI assistant, Copilot, by embedding OpenAI's models right into it.
Oh, okay.
And the strategy here seems pretty clever. They put Copilot into their free products, Windows, the Edge browser, Bing search, so millions get exposed to it.
Just gets it out there, builds familiarity.
Exactly. But then the real money maker, potentially, is offering it as a paid upgrade for Microsoft 365.
And that subscriber base is massive, right? Over 400 million licenses.
Enormous. So you have this huge existing customer pool you can upsell this powerful AI functionality to. Think about the potential for recurring revenue there. It's significant.
No kidding. And our business is actually buying in? The article mentions some adoption numbers.
Yeah, pretty striking numbers. It says organizational adoption of the paid Copilot for 365 tripled year over year in their fiscal third quarter of 2025.
Tripled. Wow.
That kind of jump suggests companies are really seeing value integrating it into how they work.
Just hype then.
Seems not. And CEO Satya Nadella apparently highlighted record license purchases, bigger deal sizes. It points towards real commitment from businesses.
And they're adding new features too.
Right. They're not standing still. They mentioned adding things like Researcher in Q3, which helps analyze data for strategy reports, and Analyst for turning spreadsheet data into forecasts.
So constantly adding value to that subscription makes it stickier.
Exactly. Enhancing productivity, making that paid upgrade harder to resist.
Okay, Copilot's clearly one major pillar. But the article also talks about Azure, their cloud platform, getting an AI-driven re-acceleration. Can you break down what Azure is and how AI is speeding things up?
Sure. So think of Azure as Microsoft's global network of data centers. It provides the raw computing power, storage, and all sorts of services over the internet.
So companies rent computing power instead of buying servers.
Basically, yes. It's the foundation for a lot of digital transformation. Now, this re-acceleration means Azure's growth rate picked up speed again, and AI is the main reason.
How so?
Businesses need huge amounts of computing power to train and run AI models. Azure provides that. There's a specific part, Azure AI, that offers these services, like access to large language models and the infrastructure to build custom AI.
Got it.
And the numbers are telling. In that same fiscal Q3, Azure revenue grew 33% year over year. Impressive on its own.
Yeah, that's strong growth.
But here's the kicker. Azure AI services directly accounted for 16 percentage points of that growth.
16 points out of 33. So almost half the growth is coming just from AI demand.
Almost half. It really shows how central AI has become to their cloud business strategy and success.
That's incredible. And to meet that demand, They must be building like crazy. The article mentioned data centers in 10 countries in one quarter.
Yeah, the scale of the infrastructure build-out is immense. It shows you the kind of capital required, but also the opportunity they see.
So lots of spending, but presumably because the demand is there.
Oh, absolutely.
Okay.
The CFO, Amy Hood, mentioned a $315 billion order backlog.
315 billion.
Billion, yeah. Specifically from customers needing more computing capacity for AI work. That's a huge indicator of future revenue.
Wow. That gives them a lot of visibility, I guess.
Definitely. And it justifies the spending. They spent $21.4 billion on capital expenditures in Q3, mostly on this data center infrastructure.
21 billion in one quarter.
And they expect that spending to increase through the rest of this fiscal year and into the next one, fiscal 2026. They are betting big on AI infrastructure.
Okay, so we've got Copilot adoption, driving software revenue, and massive Azure demand driving cloud revenue, both heavily linked to AI. How does this all connect back to actually hitting that $4 trillion valuation? The article mentions things like PE ratios.
Right, this is the valuation piece. How does the market translate this growth into a stock price? The article notes Microsoft's price-to-earnings ratio, the PE, is about 33.6.
And is that high? Low? Average?
Well, it's pretty much in line with its own 10-year average, and it sits between Apple's PE, which is a bit lower, and Nvidia's, which is a bit higher.
So the market isn't pricing it like it's wildly overvalued or undervalued right now.
That's the suggestion. It's considered fairly valued based on current earnings and historical context.
Okay.
So to get to $4 trillion from $3.2 trillion, purely based on math, its market cap needs to increase by about 25%. If the PE ratio stays the same, their earnings per share, or EPS, needs to grow by roughly that amount too. The article calculates it needs about 23.5% EPS growth.
23.5% growth in earnings. How does that compare to their history?
Historically, between fiscal 2014 and 2024, their EPS grew at an average of about 16.2% per year.
Okay, so 23.5% is a jump from their historical average.
It is, based purely on the historical average. The article ballparked maybe 18 months to get there, but
that heavy data center spending we talked about, that slows down near-term earnings growth, right?
Exactly. That massive capital expenditure weighs on profits in the short term, even though it's for long-term gain. So current growth is a bit below that historical trend.
So what are the projections looking like now?
Wall Street analysts, according to the article, are forecasting around 12.8% EPS growth for fiscal 2026.
Okay, lower than the historical average and definitely lower than the 23.5% needed if the PE stays flat.
Right. So if those projections hold, and maybe they see similar growth the year after, the article suggests reaching $4 trillion might take closer to, say, 2 years.
Around 2 years, even with the high spending.
That seems to be the estimate here. The logic is that the underlying strength, the recurring revenue from 365 Copilot uptake, that huge Azure AI backlog, provides a really solid foundation.
It gives investors confidence in future earnings, even if current growth is moderated by investment.
Precisely. It suggests that the earnings growth needed will come fueled by these AI initiatives, making the $4 trillion mark achievable, perhaps in that 2-year time frame, and crucially, sustainable.
Right, that sustainability point again. Okay, so wrapping up this deep dive, the Motley Fool piece really paints a picture of Microsoft leveraging its strengths in cloud, its massive software reach, and its big AI bet with Copilot and Azure.
Yeah, it's that combination. Azure providing the AI engine room, Copilot bringing AI to the masses of existing Microsoft users, and this huge demonstrated demand shown by that backlog.
It feels like the pieces are definitely in place. The exact timing, well, that's always harder to predict.
Always. Market sentiment, competition, execution, lots of variables. But the underlying case presented here is strong. Microsoft looks very well positioned, not just to hit $4 trillion, but potentially to stay there.
A really strong contender. It certainly makes you think, though, about the sheer scale of this AI infrastructure boom.
Absolutely.
If companies like Microsoft are spending tens of billions every quarter building this out, what does that mean for energy demands, for chip makers beyond Nvidia, for software companies building on top of it? What are the downstream effects we haven't even fully grasped yet?
That's a great question to leave people with. The ripple effects are going to be fascinating to watch unfold across the whole economy.
Definitely something to keep an eye on. Thanks for breaking that all down.
My pleasure.